One of the things that I've been having fun with is teaching my kids to not be afraid of spiders. And so, one of the things that I do and have been doing with them since they were born is whenever there's a spider in the house, I will change the way I behave. I will change my voice and I will give the spider a name. So, yesterday, there was a pretty big spider in our house, and my 6-year-old Bowen did did exactly and he did exactly that, and he said, "Oh, Gilbert, are you lost? Oh, Gilbert needs to go outside, Daddy." I'm like, "Okay, well, you know what to do." And I didn't supervise him or anything. He went to the kitchen, got a paper towel, because I don't know if you know this, but spiders do not like walking on your skin. I've tried them. I've tried to have them walk on my fingers and hands, and they won't. But they will get on a paper towel. So Bowen goes and gets a paper towel with his little 3-year-old sister, goes into their room, and has the spider climb on the paper towel. And I hear them talking to Gilbert. And Bowen's like, "Oh, come on, Gilbert. It's time to go outside. You got lost." And then my little 3-year-old, she chimes in too. "Come on, Gilbert. Come on, get on the paper towel." And so I have my 3-year-old and my 6-year-old speaking to a pretty large spider, coaxing it to crawl towards them on the paper towel. And then it gets on the paper towel, and now they're saying, "Okay, we're going for a ride, Gilbert." And they open the door and they let Gilbert outside, and they say bye to him. Bye, Gilbert. Have a good life, Gilbert. And this week I want to talk about a little bit about how we behave. We're going to touch a little bit on how we behave, but the main thing is the thing that kind of preludes how you behave, which is you first need to kind of find out what works. And then once you find out what works, then you actually have to figure out how to behave yourself to allow that thing that works to work in your life. Hey everybody, this is RC Peck with Fearless Wealth, and this week's theme is, and the best investment strategy is. Now, being in this business as long as I've been in this business, 1998 was when I started Fearless Wealth. I have looked at every type of investment strategy: fundamental investing, value investing, deep value investing, diversification investing, which most people don't call it diversification investing, but that's actually what it is. Buy and hold investing, I trust my broker investing, or I trust my husband investing. Sentimental or sentiment, looking at the sentiment investing, technical investing, and in everything I looked at. Because when I started this off in my early 20s, wanting to figure out what really works, figure this whole thing out, I had no bias. I didn't really care which thing worked. I didn't care if it was price to earnings ratio or price to book or whatever it was. I just wanted to find out what worked. And what I found was most of those didn't work. What I found that worked, and it seemed so obvious that once I saw what it was so completely obvious to me that I could see why an adult or someone over the age of 26, because the human brain is fully formed at 26, so I could see why someone over the age of 26 couldn't really see this as obvious as it was. And so what I found the best investment strategy is buy the thing. That's an economics word, thing. It's very technical. Buy the thing that is already doing what you want it to do. Buy the stock that's already going up if you want the stock to go up. Find the ones that are already doing what you want them to do. And it's so obvious, even if you're a deep value investor or a fundamental investor or whatever type of investor you are, I guess except a buy and hold or buy and forget or I trust my broker. But this makes sense because let's just assume you want the thing you buy, the stock, the bond, the commodity, the physical asset to go up. Regardless of what your first filter is, fundamental investing or value investing or deep value investing, you actually have to have the thing go up to make money. And some people just think of this as trending, like just buy the things that are trending up. But some people may not want something to be trending because they want to sell covered calls on it, or they want to buy puts or sell puts. So maybe they actually want to be going sideways. But in my life of investigating and doing my forensic science on investing, I found that buying things that are already doing what you want them to do is the single best way to grow your money in the stock market. And the reason why price to earnings ratios almost never come up, they come up a little bit in market probability, is because a price to earnings ratio can be going up a year, 2 years, while a stock is going sideways to down. Or a price to earnings ratio can be going down while a stock is going sideways, meaning the stock's getting cheaper and cheaper over time, which you'd think it would be going up because you're getting more money from the price of the stock, but that's not always true. Walmart's a great example where their price to earnings ratio is getting better and better and better and better over a decade, and the stock went nowhere. So what I found was the PE ratio didn't really help because earnings really only started helping you in like the 25, 26, 27 month period. Well, look, I ain't going to buy something and wait 27 months to hope it starts working. So I found that you buy the thing that's already doing what you want it to do. Now, this guy, Newton, kind of already figured this out for us. He figured this out in about 1695, about 330 years ago. He came up with a couple laws, actually 3 laws, but we're just going to look at the first law. And his first law of physics was an object either remains at rest or continues to move at a constant velocity unless acted upon by an external force. Well, that's all we're doing. All we're doing is looking for something that's going up, and we're going to assume one day it's going to stop going up because it's going to be, acted upon some sort of external force to stop. So we have something called a stop loss. And this is how we do it. It's not complicated. Now, I got a price chart here of the Dow Jones Industrial Average going back to 1909. And a lot of these red arrows are decades long. But things seem to stay trending, whether it's up or down, or up or down, or up for a very long period of time, or maybe even sideways for very long periods. Except, of course, when the government really starts manipulating things, and then we only get these little red arrows to go down for a few years and up for a few years and down and up. But even with those last 4 arrows, it's still moving up and down for years, not hours or days or weeks or quarters or months, but years. So the best investment strategy really is to buy things that are already doing what you want them to do. And in most cases, that means really buying something that's already trending. So, the point this week is less actually is more when it comes to investing. And whenever I work with a private client or do coaching or mentoring, one of the first things I do is start to simplify their thinking. Because usually when someone isn't growing their money well, they have greatly overcomplicated the matter. But this is just kind of the knowledge part. The thing is, this really works as long as you behave properly. And that's really the problem. People know what to do, but they behave in a way that their knowledge doesn't necessarily or does not help them. And so, really the point I want you to remember this week is maybe 2, because I added one more. And 1, really, things are much less complicated than you think they really are in the world of investing. And 2, best investment strategy ever is buy things that are already doing what you want them to do. And hey, this is just another step to really just to help you take back control of your money and your future. You guys take care, and I'll talk to you soon.